I am really excited, and I feel privileged to be joined by my wonderful panelists, so let's give a big round of applause to them. All right, fantastic. So let's get started with you, Mike. I want to talk about the idea of monetization, because as we know, we've undergone a huge shift in the search economy. 1998, up until a couple years ago, it was ads. Now we're introducing subscription plans. So can you talk about DuckDuckGo's thinking with that?
Absolutely, would love to. And maybe before we start, by show of hands, who uses DuckDuckGo today? Perfect, thank you very much. For those of you that don't use DuckDuckGo, think of us as a search browser and AI company, probably best known for private search, where we tend to be the #3 global player in consumer search, behind the obvious players, Google and Microsoft. Now that you have that context, for us, we're coming up on being in business for 2 decades, and with search and browser and most of our other ancillary services until a couple years ago, all free. So the other ancillary services, in case you haven't used them before, would be our email forwarder, app tracker protection, and then about a year and a half ago, we launched our subscription, which were products that consumers had asked for quite some time, VPN, personal information removal, and data broker protection. I'm laying that out because as soon as we launched our subscription, we started laser focusing on our AI strategy, and surprise, surprise, it was a mix of free and paid offerings. On the free side, we built out a best-of-breed summarizer. You'll find that on our homepage. That's where we monetize private ads, which is the core of our business. That's the majority of our market share and likely will be for the foreseeable future. If you then think about another free experience that's been incredibly well received, it's Duck.ai, and that's free private access to most of the major foundational models. Really unique experience. For my use cases and for many AI users, all of the features and functionality you get in our freemium offering, which again is not monetized on our side, works perfectly well. If you're looking for higher query limits though, or access to the latest and greatest foundational models, you may want to purchase our subscription. The debate that we had in monetization land was, do we keep the ASP of the subscription the same? Or do we increase it because we're adding so much value with premium AI? We actually decided to keep it the same, so still at $9 a month, you get access to premium AI, plus the other products that I had mentioned earlier. And when you come back to our mission of raising the standard of trust online, that's what we felt was most important in this market environment, was making sure that's affordable premium AI so that more users can get access to that. And it's absolutely working, that we've seen new subscriber additions increase by an order of magnitude since we've launched. So mix of free and paid, that'll continue, and look forward to the roadmap next year.
Awesome. And does anybody else, while we're on the topic, have anything to say about monetization in the answer economy?
I mean, I'm a tech investment banker, so I help advise companies on strategic transactions, and I would just say that one of the things that buyers are particularly focused on is, okay, this thing's been around for about half a cup of coffee. It's new, it's innovative, it's disruptive. How is it monetizing? How do they renew? All the metrics that we're used to in tech land that everyone kind of has built up over the last 10, 20 years, where you can kind of look at a company and you can tick all the boxes and go, yep, that's a high quality company. They may or may not exist in AI companies today. And buyers are having to wrestle with how to do a quality assessment of revenue, of the customer base, of how renewable it is, how sticky it is in an environment where they don't have time to wait, because this is all happening so quickly. And so this question comes up a lot. And frankly, it's different for every company in a way that wasn't true 3 years ago. And so I think understanding how to tell your pricing and your monetization story is critical when you're raising capital and when you're talking to strategic parties. It's not a commodity, that description of how to talk about your business. It's not a commodity in a way that it was very recently.
Pretty interesting. John, I want to shift to you with Amplemarket. You talked to me the other day about this idea of a queryless search. So can you explain, how does Amplemarket deal with when a user doesn't know what to ask, and can design help that?
Yeah, so for me, this is actually, I think, a space where people haven't yet spent enough time thinking about. I sort of sometimes lay at night kind of with the nightmare of the questions that I'm not asking ChatGPT, right? Because it's incredibly good at answering whatever questions you ask of it, but what questions should you ask? And I think that a lot of users face this same problem, and I think oftentimes the experiences are severely under-optimized to solve that problem, to try to nudge them in the right direction. And so, for instance, right now at our company, we're evaluating new business intelligence tools, and I've been trying a bunch of them, but it's incredible that it's actually so geared still towards answering your question, but you really have to come in with a very precise question, right? So for us, like, we're trying these tools. We're very specific. We're like a SaaS company. We're very similar to other SaaS companies in terms of the metrics that we care about. But when you land on these tools, they don't take any of that context into account, right? So when you're looking at your users table and maybe your subscriptions table, there's very little nudging you the right questions to ask. Maybe it could prompt me to compare our metrics against industry benchmarks, or maybe it can tell that I'm looking at a few tables that kind of could be connected, and it could prompt me to ask questions in regards to that. And so I think there's still a lot to be done there. And yeah, we spend a lot of time thinking about that.
Right, so you're kind of looking at what the user is doing and then trying to nudge them in the right direction based on the previous context.
Yeah, based on what the user is doing. Also for us, like when a new user starts or when a company signs up with Amplemarket, we trigger this pretty intensive deep research, such that when you land on our platform, it's already pre-configured with whatever we were able to find online about you. What do you do? Like, who do you sell to? What are your products? How do you compare to competition? So that you're never landing on a blank instance. You're landing on something that has already been pre-configured for you. And so we spent a lot of time to try to do a lot of that work ahead of the user, so that when they come to our platform, it's the distance to show them value is much shorter.
Got it. Okay, Rob, I want to jump to you. Zooming out, can you give us the bird's eye perspective of what M&A is looking like in the AI answer space right now? What are acquirers looking for, and has the buyer profile changed?
Yeah, so it's, well, just at a high level, if we just look at the tech M&A market this year, it will be one of the best years of all time. And at the same time, and so, the only people more tired than the founders and AI engineers in this room are the corporate development departments of the big buyers. Those guys are not sleeping. There are 50 calls a day from folks like us trying to sell them something because things are moving quickly. And frankly, I would say there's a lot of companies, a lot of startups that are trying to maybe sell their companies a little bit prematurely. And so those corporate development teams are having to kind of take all those inbounds and deal with them. At the same time that we've had close to a record year, it feels like the potential for M&A is somehow multiples of what it is right now in terms of what's actually getting done. A lot of the M&A that got done this year and last year was acqui-hires. It's not real M&A, to be honest, and I don't think it's going to persist. So if anyone hasn't gotten their $100 million package from Meta yet, I suggest you do it very soon. We're going to see real companies get acquired. We've started to see some of that. Those are interesting deals. I don't want to do too much pattern recognition on it, but you've got companies trying to do vertical integration. CoreWeave is buying Weights and Biases. Totally different company. Strategic rationale made total sense. It's working out very well, as far as I understand. We advised Weights and Biases on that one. So there's a real business that had the right customers, was a brand name in the space, and a big company that had a strategic need right before their IPO, by the way, so it helped their IPO story, went out and did something at a very aggressive price. But the breadth of who can be a buyer, I think, and who wants to be a buyer, is very different than anything I've ever seen in my career. It's often where you go and you go, okay, these three companies are green light and everyone else is sort of yellow light or red light. Everyone is green light right now. It's unquestionable that everyone recognizes that something very, very important to their existence is happening around them. Their only question is, what do I buy when, and what am I willing to pay for it? And the what am I willing to pay for it, so far, for real businesses, look like multiples that we've never really seen before in tech. We're talking high teens, low 20s forward revenue multiples, which are setting records over and over and over and over again. And that's either a sign of a bubble, or it's a sign, and frankly, this is my personal perspective, that the markets that these companies are going after are many, many, many times the size of any markets we've ever thought of before, because AI is not a tool. I think Jensen said this yesterday in DC. It's not a tool. It does work. And so we're doing real productivity, real labor displacement. The size of those markets is enormous. At this early stage of a cycle, if you're a big, deep-pocketed company with a large strategic footprint to spread this across, you should be doing deals at what look like crazy prices, because as far as I can tell from the deals that have happened so far, the synergies are off the charts, completely off the charts, and frankly, may drive even higher prices in subsequent years as these companies mature, as real businesses come out and they say, okay, that's real revenue, that's real profitability, or we can understand what the margin structure of this looks like, and the shape of whatever AI is going to look like in the enterprise and in the consumer market, because that's still, I mean, we're sitting up here today talking about things that probably 2 years from now we're all going to look at and go, that looked silly, that's not how that played out. And that's unlike anything we've seen before now. So it's sort of it's a fascinating time to be doing what I do. Companies need real strategic advice, and they have to make bets. There is nothing certain going on, and people are being asked to kind of bet the company. I'll just say one more example. Nice Systems is a contact center company that trades at a high single-digit EBITDA multiple. They bought Cognigy for a high teens revenue multiple. In any other time in history, if a public company did that, their stock would get hammered, and their stock went up when they did it, because their investors recognized this is existential risk and they better do something bold, and their new CEO, who didn't have to live with the prior strategy, said, I'm gonna do something bold, and got rewarded for it.
Maybe just really quickly, I couldn't agree more with Rob, and before I became an operator, was an M&A and IPO advisor. It is extremely hard to stay disciplined as an operator these days, to what Rob is saying. But again, I couldn't agree more that the synergy story of most things that are happening in the market are real. And then I also believe we're starting to get to a setup where things are starting to coalesce, where more and more companies have their strategy intact. And then that's when you're starting to see things last couple weeks, Atlassian and the browser company, or today's news with Bending Spoons out of Italy acquiring the legacy AOL assets. So I think we're going to continue to see more activity in the space. The only thing I'll slightly disagree with Rob on, an acqui-hire can be a real deal, but that's okay.
I was curious to ask you.
I just don't know how to value them, so I don't. So it's like, yeah, more.
These are not the
just
types
give us
of
more.
deals.
I don't know.
Yeah, these are not the types of deals that Rob does. He does multi-billion-dollar deals, so that's his bias. If you were an acqui-hire candidate, I'd love to speak with you. I think it's a real deal. But in any case, yeah, it's a spectrum of outcomes and deal values.
I'm a acqui-hire candidate if you have Mark Zuckerberg dollars.
We'd love you on the team, Rob.
Yes, let's double tap on that. So, Mike, I wanted to ask you, DuckDuckGo has done a couple of different AI investments, including investing in Exa and U.com. How are you thinking about AI companies right now? And is it a build or buy or collaborate?
This is almost too good of a segue. We look at all the different market segments, and much like any disciplined operator, you're going to go through your classic build, buy versus partner methodology, evaluating different opportunities. For ourselves, what can make M&A difficult, believe it or not, we have less than 350 people at DuckDuckGo, leading the 3rd largest search engine globally and one of the top 5 browser positions by market share globally. So if you think about that in context of a lot of great teams out there and brands, it could be difficult in terms of bringing teams together, because this is probably something Rob and I haven't talked about, but people behind deals are an imperative, and I think sometimes that gets lost. lost in terms of cultural integration or otherwise. In light of all of that, kind of as a setup, that's why we set up DuckDuckGo Investments, was we partner with many great companies across the landscape, and we wanted to make sure that we continue to do that on a commercial basis, but also help in terms of any capital needs that those partners have. From our perspective, these are phenomenal kind of symbiosis between us and the potential partner, the investment target. Why is that? If you think again about who we are and what we do, these are all web scale problems. And if you think about all the companies that are jumping into the AI race, not everyone's approaching it from a web scale requirement. It might be something that's skinnier in terms of go-to-market or ultimate end product. So for companies like Exa or you are phenomenal, the best out there from what we've seen. If they can help us solve problems at web scale, a lot of their other customer problems become very easy. So it's where we work with them on some really interesting things, and then for them, great benefit back to their customers.
Definitely. Okay, I want to switch gears a little bit and talk about search quality. John, from a builder's perspective, how have you thought about it? I know one of the things we had chatted about was that sometimes LLMs tend to hallucinate and you can get a wrong answer. And, what do you guys do in those situations? Do you think there are, situations where you should say, I'm not going to answer this query?
Yeah, so I think we've all had personal experiences with that LLMs can be very good at very confidently giving you a wrong answer. And it's not always easy at all to tell, like when you want to be on the lookout for that. And then especially when you start embedding search into all sorts of business products, then that problem can really multiply, right? But so you can go on any spreadsheet and you can write the names of 100 private companies, and then you can ask an LLM to give you the revenue for those 100 companies. And it's going to put a number there, but then you're left thinking, okay, how accurate is this number actually, right? I was just the other day asking a few LLMs what's the likelihood that Mamdani is going to win the election in New York, and they all kind of wing a number, right? It's like, 50%, 75%. But when you get just these results from an API, it's easy to kind of just take them at face value, and then all of a sudden you have an issue that propagates across your product. And so we've done a lot of work on the app side to try to spot these more problematic queries where the LLMs are going to be more prone to give you answers that maybe you can't fully trust, and to kind of give users the right warnings. Because again, for users, it's oftentimes not obvious at all. And so, yeah, it's a problem that I think is going to be present in a lot of products, and it's going to take a lot of work to solve.
Just to build on this too, the topic of conversation is the best of AI search isn't free. It's expensive to run this stuff. How has Amplemarket, and I think, Mike, how has DuckDuckGo thought about this? Go ahead, John.
Yeah, so it's just interesting for us because, well, for two main things. One is that the cost equation has been evolving quite rapidly over the past few months. And for us, it's actually how much we're willing to pay for a search. That changes by maybe 2 or 3 orders of magnitude. And so there's certain queries where we're willing to pay $20 to get an answer to, and there's others where it's got to be at a fraction of a cent. Right? So I was just describing before kind of this research that we do to configure our own product for a user that is signing up. We're actually willing to spend up to $20 in gathering as much context as we can, such that when they land and they're going to do this expensive POV with us, the platform has already been fully configured for them. And so there's budget is not a constraint. But again, there's other cases where we really need to get it to a fraction of a cent because we might be running that search hundreds of millions of times a month. And so that the problem varies quite widely for us.
Sure. Maybe to jump in from our perspective, and I think Rob had some great perspectives on this earlier, that The answer is going to be different depending on your company stage, of course. So for ourselves, as you heard, we're coming up on our 20-year anniversary, and the way that our founder built the company was being economically responsible from early innings. So we've been very capital efficient. We took very little primary capital. We've been very profitable for over 15 years. And when you think about private ads, building our experiences, and then ultimately we think about free versus paid or otherwise, I think the fundamental is just like good product market fit. As always, cliched, you're going to get rewarded by the market, and then ultimately things may pay for themselves in terms of user traction, et cetera. So that's exactly what we saw with AI in this chapter. Was some of the numbers I looked at a couple years ago a little scary, maybe suggested that there was going to be some margin compression. That was exactly not the case. What we've done is we've developed the best search results we've ever have, and then that's ultimately delivered the best user experience, delivered more user traction, record financial results and the like, and then these things, in essence, can help self-fund themselves.
Yeah, incredible 20 years. I mean, it's amazing. Now, things are changing so fast in the AI search market, but I am curious to hear from all your different perspectives. Do you have a 5-year bold or hot take? Rob, I'll start with you.
5 years is a long, long time. We have a handful of multi-trillion-dollar companies that exist today. We will have a lot more than those in 5 years. That's one prediction, I would say. And I think entirely subject to whatever the regulatory regime is around M&A in the world, we will have companies that are worth 10, 20, 30 trillion dollars if they're allowed to do M&A. Today, they're sort of not. Sort of. They can do acqui-hires. They're getting really creative with lots of very well-paid lawyers
FTC, huh?
figuring that out. But that I would say, I would wager that is different if you're thinking about historical cycles. These big companies, and by the way, big means trillion. If you're a $300 billion company today, you kind of might not be in the game for this in a real way. That's different in that in the cloud cycle for example, in the cloud era, for example, I don't think anyone had really read and digested their innovator's dilemma, or they hadn't listened to the Acquired podcast enough to recognize how these historical cycles play out. They've read it now. They get it. They're not asleep at the switch. And so my forecast for the next 5 years from our perspective is me and everyone else at Qatalyst is going to be very, very, very busy.
So for me, maybe like my forecast is more related to search, and I just expect that what's indexable and what's freely available online to change quite a bit, primarily because just we're undergoing like a deep technological shift, but also the incentives are changing quite rapidly. And sometimes it's hard to imagine, but like when you think back, and for instance, one thing, a weird hobby of mine is I like to read letters exchanged between scientists like from hundreds of years ago. And you can go and look at like the letters that Einstein wrote to his colleagues when he was figuring out special relativity. You can't do that today. In the sense, like you can't go and read the email of the person that won the Physics Nobel Prize and like understand what they were thinking about, right? So that's just information that used to be indexable and public that now it's not, right? Or you could, in the past, you could open up a phone book and look everybody's number. Like that's much harder to do today. And sometimes it's hard to imagine like these things changing, but they do change. And so especially with such significant technological and incentive changes, I do expect that 5 years from now we might be in a world where the internet can look quite different than it does today.
Couldn't agree more with that.
This is good timing, because if you asked me this question 2 years ago, it would have been a boring answer. I would have said the market's actually going to look more similar than different. And where was I coming from? What was my bias? We've seen how autonomous driving has played out over the last 2 decades, and we're kind of just getting there. So my skepticism was generative search going to get so good that it was going to replace traditional search? I changed my answer Q1 of this year because the experiences became so darn good that I think over the next 5 years we'll see generative search substantially replacing traditional search, and we're starting to see that user behavior come into the fold. Talking my own book, DuckDuckGo will be a 10% market share player.
All right. It's a great way to finish up. Cheers. Thank you, guys.